Hello traders and welcome to Financia.com. Today, we will discuss everything you need to know about the bearish and bullish Tasuki Gap Pattern in MetaTrader and also in TradingView charts. Let's begin by defining this candlestick pattern. The Tasuki Gap Pattern is a formation of three successive candlesticks that indicate that the current trend may continue. In other words, it's a continuation pattern. There is a gap between the first and the second candles that must be offset by the third candle. Furthermore, the first and the second candles follow the direction of each other, whereas the third candle always goes against them. In fact, the Tasuki Gap Pattern could form many times during a strong trend where volume is high and price spread is also high. However, the more time the pattern appears, the stronger the trend. Also, the wider the gap between the first and the second candles, the stronger the trend. First, let us treat a downside Tasuki Gap Pattern example on the Euro, CHF, 30-minute chart. The downside Tasuki Gap Pattern, also referred to as the downward Tasuki Gap Pattern, is a bearish pattern that appears only during downtrends. The downside Tasuki pattern contains three successive candles. The first candle is a long bearish candle that gets the price down. Then comes the second candle, which is also bearish. The second candle's size doesn't matter as long as it leaves a gap below the first candle. Then comes the third candle. It must be bullish, and it fills the gap left between the two candles. Traders may consider opening short positions with the close of the third green candle of the downside Tasuki pattern. Second, considering the same Euro, CHF, 30 minutes. The upside Tasuki Gap Pattern, also referred to as the upward Tasuki Gap Pattern, is a bullish pattern that appears only during uptrends. Similar to the bearish Tasuki pattern, the bullish Tasuki pattern contains three successive candles. The first candle is a long bullish candle that gets the price up. Then comes the second candle, which is also bullish. The second candle's size doesn't matter as long as it leaves a gap above the first candle. Then comes the third candle. It must be bearish, and it fills the gap left between the two candles. Traders may consider opening long positions with the close of the third red candle of the upside Tasuki pattern. Thanks for watching this Tasuki Gap Pattern tutorial.